What up, guys? I hope everybody's doing well. I hope that you had a nice time with your family and friends, loved ones for Christmas, and are ready for the new year. I personally took a few days off. I have family in town and kind of just needed a break from YouTube. And, it's been a long 2022, trying to guide people, trying to do a homework assignment every night and research and make PowerPoint presentations for you guys basically every day on YouTube. And if you guys just can take a couple minutes just to listen to what I'm gonna say, I'm just going to, this one time in this one video, go through what my plan is for YouTube, for content coming up for 2023, how I'm gonna handle it, what I'm doing in the courses. We're gonna talk about the algorithm, and it'll just kind of give you an idea of what we're doing on this channel. I won't be making a lot of videos like this, but I do want to speak to everybody at the same time. So if I could just ask you for a few minutes of your time before we get started. And obviously we've been working on our trading algorithm, which has over 100 indicators, a ton of coding. We've been working on it for a couple years. We're going to be releasing a version. This does get you 80 to 95% if you follow it. It has multiple strategies inside of it for scalping, day trading, swing trading, position trading, and investing. So that will be released here very soon, and then we'll be updating as we go for subscribed members. So I want to just go over real quick scammers and spammers. Every time I post a video, I get 40 to 70 comments immediately on the channel. I will never ask you to call me, contact me, give me money, anything like that. If it doesn't say Wheelhouse Trading with the highlighted comment as the real owner of the YouTube channel, don't reply or give any personal information, okay? And because I believe a lot of these scammers and spammers are now coming in the Discord, I'm probably by force going to have to put a $5 gate fee on the Jedi chat area just to protect my Jedis and Padawans, make sure they're real people. Now, as far as the subscription for the Discord, it is free to come in, and we have other groups in there, and it's completely free. But if you want things like trade alerts, courses, the previous Wheelhouse Wednesdays, one-on-one mentoring, the algorithm, the Jedi chat area, you want everything, you can subscribe for that. And right now I have a 50% off coupon. Just come in the Discord, verify, go to subscriptions, go to Jedi Annual, you got 50% off there. We are setting up a buy now, pay later. So if you do the annual and you just want to make like $25 payments a month instead of paying the whole thing up front, we're gonna be giving you guys access to that through like a firm or one of those buy now, pay later companies. I'm just waiting on support to contact me back. We're probably going to be setting up a crypto trading account, and we'll have courses on that, and then the trade alerts that align with that. Most likely I'll be bringing in another person to help with trade alerts as well. As I get busy, I can only do so much. There's only so much time in the day for me to manage so many things, but we do want to grow, and we do want to keep helping people on everything from scalps all the way to longer investments. So we'll be doing that. Now, some of the things that I'm going to be doing in 2023 is obviously we're going to be doing a lot more courses, okay? And on YouTube, I'm going to do a mix of content. I'm going to be doing, relevant news like I have for crypto and stocks and, the economy in general. But I'll also continue to do focused content on things like Tesla or Twitter or Sam Bankman-Fried. And then once a month I'll do like kind of a documentary style video like I did in the video How the Fed Stole Christmas. I spent a lot of time. I spent 6 days on that video. About 30 minutes of it was censored. That's why I know I'm onto the right thing. And I noticed a lot of the other influencers are in agreement with me. They're thinking the same thing. Not just influencers, but very large, well-known people like Raoul Pal and Chamath, and I saw Altcoin Daily, BitBoy, many channels are feeling and thinking the same way that I am. And I put all that into my last video, How the Fed Stole Christmas. I'd appreciate it if you watch that. It's, not only did I spend a lot of time on it, but it truly is how the world works, and how they are trying to control your crypto and even DeFi and keep people broke. And I think you should at least listen to it. Now on this channel, I don't want to be political and I don't want to be overly opinionated like an Alex Jones or anything like that. But I do want to put the content out from good sources like Forbes, Wall Street Journal, Cointelegraph, good sources, and put that in front of you to make a decision yourself on things. Now, obviously I have opinions and I have strong opinions on certain things, but I don't want my viewers to feel that they have to be forced into one way or another of thought. However, you might get a little eye roll or a little laugh or a little comment here or there. There are a lot of things that are really bothering me right now in the world, and I can just see through a lot of the BS going on out there, and it's very disheartening. And I even believe that big money is starting to lose hope because this current administration and centralized banks around the world are literally treating the markets, crypto and stocks, as if it's a battlefield and putting it under constant enemy attack. They want people to be broke. They have come out and said they want unemployment higher. They want homes to come down, and under the cover of dual mandates and price stability and yeah, I get it. But there's a lot of things at play and ulterior agendas out there from centralized banks to keep you down and to take control of the things that can help you become wealthy. So make sure you watch that last video, How the Fed Stole Christmas. Now, one of the things on YouTube that I want to do, and maybe it won't get as many clicks and as many views, but that's okay. This is an educational channel to help you learn strategies from the best traders, investors, and legends of the markets. Okay, so I want to build playlists and I want to read through their books explaining chapter for chapter. Okay, and we'll have a playlist for William O'Neill. We'll have one for Mark Minervini. We'll have one for Glassnode on-chain data. Okay, we'll have stuff for all the financial crises, which are interesting, and those will be interesting videos. We'll have like macroeconomics, things from like Raoul Pal and Ray Dalio. They're my two favorite on macroeconomics. We'll go through all their books chapter for chapter. I'll explain them, and hopefully that helps in an educational way. If that's something that you'd be interested in me doing, put in the comment letting me know, because it's going to take years of work for me to make that content, and it's not really going to help the channel necessarily. Because the channel, like YouTube, is really geared on relevant news of the day, focused content, how-to strategy type videos. It's a lot of work and probably won't help the channel tremendously, but it's educational, and I feel that it's important for the mission that I'm personally on, and that's just to help people learn from the best strategies and traders and most successful people that have been in markets for well over 100 years. So we'll go through Wyckoff, we'll go through Charles Dow, we'll have playlists for all these different people, and again, just let me know if that's something that you'd be interested in learning, and maybe I'll do one per week, so we'll get 52 of those out over this next year, and then we'll have a mix of that relevant content, the focus content, maybe a documentary here and there, and we'll just stick to it like that for you guys. So make sure you subscribe. We do have a Twitter and Instagram, of course, YouTube here. Now, there's a lot of things that interest me, not just trading and investing and technical analysis and fundamental analysis. There's a lot that interests me in crypto protocols, economics, politics, the stories, the growth. There's a lot of things that interest me. So when you have a YouTube and you're in financial markets, obviously the charts move, okay? The news moves, and everything just moves day to day. So it's hard to have an exact schedule on YouTube because things move so fast sometimes. We will always do technical analysis on this channel. That is my favorite thing to do. It's the easiest thing for me to do because I'm really, knowledgeable on technical analysis. So we'll have a mix of that in here as well for you, okay? So some of the things that I'm doing for myself is I have a HODL account, and I have a swing trading account, and I have a day trading account. Those are both prop accounts. and we will be having those alerts for people in the Discord. I'll be talking about some of it on YouTube, and I'll most likely be bringing in at least one more person, if not two, for trading, for scalping and day trading. So it's not just me doing the alerts, so we can grow there since I get busy. We'll be setting up some new sponsorships. One of them will be a crypto exchange, so we'll be doing courses on that and trading there and showing everybody the right ways to protect yourself, to take profits, to do stops, and that'll be for crypto specifically. My hope was that when inflation came down 2 months in a row like it did, that would create a small trend and big money would put their money into the markets. Now, we did get a second read of inflation that did come down, and big money did put their money into the markets. But then it became clear as day to me that the Fed and other centralized banks around the world wanted to crush the markets like it's a battlefield and the markets are the enemy, with constant relentless attacks being handled through either the centralized bank narrative or the media cycle, which obviously, after seeing Twitter files and just knowing censorship and how the media is run and who owns them, you could see how that works. And it's to keep us poor. So we have to be very smart, very tactical, always be learning, always be educating, and always be striving for our goals. And even though it's hard, and 22 has been hard, and 2023 might be hard, I'm going to be here to support you. It's hard for me, it's hard for you. We can support each other, and we will get through it. And the things that you do now for your investment portfolio, I mean, the number one thing is buy low, okay? So it's low, and there's a lot of really good ones out there that won't go bankrupt, or they're cryptos that have good projects and prices are outstanding if you have a long time horizon. Trading, we'll be going through all that stuff, of course. So let's get started. I appreciate you listening to that. Now let's get to the good stuff. So I want to go through the top 5 winners and top 5 losers in crypto for 2022. I want to go through some of the FTX, Sam Bankman-Fried, and crew updates, as well as FTX Contagion information, and a little bit on the regulation framework that's being discussed in DC. So let's just get it started. All right, the first thing I wanted to talk about was the top 5 crypto winners and losers of 2022. Bitcoin and Ethereum are not part of the surprising list of 5 best and worst performing cryptocurrencies for 2022. So this article is from Cointelegraph, and they look back on the best and worst performing cryptocurrencies among the top 100 assets by market cap. They used the highest and lowest year-to-date returns through the close of December 25th, okay? Now, overall, the cryptoindex.com, the CIX 100, it's an index that tracks the 100 best performing cryptocurrencies. It fell nearly 68% year to date, suggesting that most top coins underperformed in 2022. Now, stable coins are naturally going to be omitted from this list. Similarly, coins tracking the value of gold and similar mainstream assets have also been ignored. Instead, the coins mentioned that we're going to talk about include decentralized currencies, smart contract tokens, and exchange tokens, okay? So the top 5 crypto of 2022. The first one was GMX. Year-to-date return, 111%. It is decentralized, and it has a market cap of $379.4 million. GMX acts as a utility and a governance token within the GMX decentralized exchange DEX ecosystem, and is the best performing digital asset among the top 100 coins. Number 2 was Trust Wallet, or TWT. It had a year-to-date return of 92%. Its sector is a payment platform, and market cap $570 million. Now, Trust Wallet token serves as a utility and governance token within the Trust Wallet ecosystem. The token moved lower in tandem with the rest of the crypto market, mostly in 2022, but like GMX, its upside momentum increased amid the collapse of the FTX exchange in November. The third, the ticker is LEO. Year-to-date return, negative 3.5%. Sector, centralized exchange, market cap 3.44 billion. LEO is native to the FTX ecosystem. The token suffered losses in 22, but only 3.5%. They were little compared to the most top coins, including Bitcoin, Ethereum, which lost over 65% in the same period. One of the reasons that Leo outperformed most top-ranking assets could be FTX's pledge. Notably, the firm declared at the time of Leo's private sale in 2018 that it would employ 27% of its revenue to buy back the tokens until the entire supply of 985.24 million units was removed from circulation. Next up would be OKB. Year-to-date return, negative 19%. Sector, centralized exchange. Market cap, 1.38 billion. OKB is a native token of the OKX exchange. It provides user discounts on trading fees, access to OKX's initial exchange offering, and voting rights for tokens to be listed on the exchange. And the fifth one would be the Open Network, ticker TON. Year-to-date return, negative 33.5%. Sector, smart contracts. Market cap, 3.52 billion. The Open Network is a Layer 1 blockchain ecosystem developed by the Telegram founders Nikolai Durov and Pavel Durov. Its native token, TON, trended downward in line with the other top crypto assets during most of 2022, but recovered impressively ahead of the year's close. Now, on to the worst 5 cryptos of 2022. Of course, number 1 is Terra Luna. Year-to-date performance, negative 99.99%. Sector was smart contracts, market cap 604 million. Terra became a debacle for cryptocurrency after its market valuation crashed by 99.99% in May. The unraveling started with the implosion of Terra's algorithmic stablecoin, Terra USD, making one of the biggest busts in the crypto industry's history. Number 2, not surprising, FTX token, FTT. Year-to-date performance, negative 98%. Sector, centralized exchange. Market cap, 307 million. FTX token served as the native token to FTX, which collapsed after facing a liquidity crisis in November. We all know. And this one is unfortunate, but number 3 worst performing cryptos of 2022 is Solana. Year-to-date performance, negative 93.35. Sector, smart contracts. Market cap, 4.11 billion. Solana, a Layer 1 blockchain protocol, crashed 93.35% year-to-date due to a sequence of bad news across 2022. That includes 6 network outages in the year, a $200 million hack on a Solana-based wallet, and Solana's association with FTX. Number 4, Axie Infinity, ticker AXS. Year-to-date performance, negative 93%. Sector, gaming and metaverse. Market cap, 775 million. Axie Infinity Shard serves primarily as the governance token for Axie Infinity, a play-to-earn P2E gaming ecosystem. It also acts as legal tender in the Axie Infinity marketplace, where in-game non-fungible tokens, or NFTs, can be purchased. And number 5, worst performer, is Sandbox. Year-to-date performance, negative 92.5%. Sector, gaming metaverse. Market cap, 690 million. Like Axie Infinity, the Sandbox is a virtual platform where users can create, own, and monetize their gaming skills using NFTs and the Sandbox. Let's take a look at some of the crypto news going on, including Sam Bankman-Fried updates, Caroline Ellison updates, crypto hackers, stuff going on with the miners. We want to look at, what they're saying as far as, regulatory frameworks, what's going on out there with regulation, and contagion, if it's spilling over outside of the crypto industry into Wall Street or other sectors of the economy.
FTX, Celsius, BlockFi. A wave of bankruptcies is hitting the crypto industry, and policymakers are calling for
regulation.
Regulatory framework.
We really need to make sure that that environment has the appropriate regulatory guardrails.
To find out how Washington might regulate the crypto industry moving forward, let's look at a few past SEC investigations that reveal how the agency sees crypto. In 2020, the SEC sued cryptocurrency company Ripple over the company's coin, XRP.
It is by far the biggest piece of litigation that the SEC has against a cryptocurrency.
The agency charged 2 Ripple executives with engaging in an illegal securities offering by selling XRP. The agency argued that it wasn't a currency. It was a security, making the distinction using the Securities Act of 1933. The law says that if something is an investment contract, or one form of a security, it can be regulated under this act. But the courts didn't clarify what that was until a Supreme Court case in 1946. To call something an investment contract, it has to pass a test, aptly named the Howey Test. There's just 3 questions. First, has someone invested money? Then, is there a common enterprise? Is the success of the buyer intertwined with the seller? And third, is the buyer led to expect profits derived from others? If all the answers are yes, it's a security.
The Ripple lawsuit says, the SEC are holding their ground and insisting that this whole new world of crypto is really just a new form of the same old function, which is to issue a kind of an asset in order to raise money to build a business.
But some crypto companies, like Ripple, don't accept this idea. They say their products aren't securities, they're commodities, like gold. They say that digital assets with a real-world purpose don't trade because of the seller. There is no common enterprise, so the tokens aren't securities. Ripple said the SEC was acting outside their legal limits, and they would continue to fight the case. In September, both parties filed motions asking a federal judge to render a verdict. With this case, the SEC took its biggest shot at broadly establishing its jurisdiction over the crypto market. Then, a year later, the SEC took the same law and applied it to a new part of the industry, crypto lending. It started investigating BlockFi, a platform that allowed users to loan crypto to others for trading. For the case, the agency's reasoning was this. The way BlockFi's product worked is that it borrowed crypto assets from customers with the promise to repay it with interest. That, the SEC said, counted as investment of money. BlockFi would lend those assets to institutional borrowers and keep some profits for itself. There's common enterprise. And based on BlockFi's statements about paying interest, the company led investors to expect profit. So, BlockFi's crypto lending accounts passed the Howey Test, making it, in the SEC's eyes, a security. BlockFi settled for $100 million, the highest fine ever agreed to by a cryptocurrency company. BlockFi CEO Zach Prince said the company cooperated with regulators.
We have a long history of compliance and working with regulators, and this is another example of that.
BlockFi, which filed for bankruptcy in November, did not reply to a request for comment. But the case expanded the SEC's use of the Howey Test to regulate crypto, showing the agency was willing to target non-traditional digital assets. Then, later in 2022, the agency took aim at a different part of the industry. The SEC was prosecuting celebrities for advertising crypto. For example, let's look at the agency's recent action against Kim Kardashian. In September 2021, Kardashian posted a video and swipe-up story on Instagram promoting Ethereum Max tokens and was paid $250,000 for the post. The SEC said that because Ethereum Max was a security with, you guessed it, an investment of money, common enterprise, and a reasonable expectation of profits, the agency argued that Kardashian's post should be regulated under another part of the Securities Act that said she couldn't advertise a security without revealing that Ethereum Max paid her. The SEC fined her over $1 million for the lack of disclosure. Kardashian did not respond to a request for comment. The cases against Ripple, BlockFi, and Kardashian show the SEC's strategy for applying securities regulations to crypto. The SEC said in May it would add 20 new investigators to its crypto unit. But if regulations changed, some of the crypto market could fall under the Commodity Futures Trading Commission, the SEC's sister agency.
Okay, so that's the Howey Test, and that is how the SEC is using the Howey Test against XRP, claiming that it is a security because it matches all three criteria of the Howey Test. Now, let's just real quick take a look at the contagion, how it spread, and if it's going outside of the realm of the crypto space.
The fall of the stablecoin Terra sparked a wave of losses, leading to bankruptcy filings for 5 major crypto companies, paused withdrawals, and declining value for cryptocurrencies. Usually, when an industry collapses, it has the potential to ripple far out to other parts of the economy and can even spark a financial crisis. But so far for crypto, the fallout has been pretty contained. Here's why the crypto industry's collapse has happened in a closed loop. The finances of many crypto companies are intertwined. Just looking at a slice of the industry, you can see how closely related those 5 bankrupt companies were. Three Arrows, a crypto-focused hedge fund, had invested in crypto assets and companies and took loans out from other companies. One of these investments was Terra's sister token, Luna. When these assets fell, so did Three Arrows' balance sheet. As a result, the company failed to repay debts and was ordered to liquidate in June. In the wake of that bankruptcy, crypto lenders BlockFi, Voyager, and Celsius were taking losses on declining digital currency prices and on loans they had given to Three Arrows. Then, crypto exchange FTX extended a line of credit to BlockFi, and its sister company Alameda extended a line to Voyager. Voyager filed for bankruptcy in July. A few days later, Celsius did too. And when FTX filed for bankruptcy in November due to a mismanagement of funds, BlockFi followed. The Financial Stability Oversight Council said in a report in October that this interconnectedness is part of why the industry can crumble so quickly. One of the reasons those companies are so tightly linked, traditional finance institutions have stayed pretty separated from crypto. For example, if you look at the list of some of Celsius's biggest creditors in their bankruptcy filing, there aren't any banks listed.
In other industries, for example, banks will provide credit lines or arrange corporate bonds or do other sorts of financings. In crypto, it's been much more limited. There just hasn't been the same embrace that other industries have seen.
A small handful of banks, like these, have courted crypto companies, but big players in the financial market have been more hesitant.
Okay, I'm a major skeptic on crypto tokens, which you call currency, like Bitcoin.
Regulation for banks, which is help set by the Office of the Comptroller of the Currency, requires them to have a number of safety measures in place before engaging with digital assets.
The resilience of the traditional banking system to the recent events in crypto is not an accident. Rather, it is due, at least in part, to federal bank regulators' continued and intentional emphasis on safety and soundness and consumer protection.
Crypto makes up just 0.01% of exposure for banks. But that isolation has helped prevent the crypto crisis from spilling into the larger economy. Think about the housing crash in 2007 that eventually led to the Great Recession. When housing prices declined, it sparked a crisis in subprime loans. As some banks had a stake in these type of mortgages, that crisis leaked into the traditional financial system.
It began to snowball and caused a system-wide meltdown, and major financial institutions like Lehman Brothers failed because of their exposure to the housing market.
Other industries like housing also have value in the economy. There's dollars behind it. But crypto's value is still mostly speculative.
This is what happens when you have a lot of money pouring into an unregulated industry that has little discernible, clear value, aside from the speculation itself.
While the crash has been mostly contained in this case, it's left a lot of questions about how financial institutions might interact with the industry in the future.
Okay, now let's just listen to some current crypto news from today.
Okay, let's talk about the top stories. First up, the former CEO of the trading firm closely tied to FTX said she was, quote, truly sorry for defrauding customers and misleading investors and lenders when pleading guilty to criminal charges tied to the collapse of the now bankrupt crypto exchange. That's according to the New York Times, which cited a transcript of the hearing unsealed on Friday. Caroline Ellison also reportedly told a federal judge in Manhattan last week that she, quote, knew that it was wrong. The former CEO of Alameda Research agreed to help federal prosecutors build their case against former FTX CEO Sam Bankman-Fried. 28-year-old Ellison also reportedly said she went along with the decision of SBF and others not to disclose the cozy relationship between FTX and Alameda, as well as the decision to divert billions of dollars in FTX customer assets to plug losses at the crypto hedge fund. Meanwhile, Bankman-Fried was released last week on a $250 million bond and is allowed to live in his parents' house as he awaits trial over the collapse of the crypto exchange he founded. His next court date is scheduled for January 3rd. Next up, crypto miners powered down over the holiday weekend as a powerful storm hit the U.S. Data from BTC.com reveals that between December 21st and the 24th, the Bitcoin mining hash rate, which is a measure of computing power on the blockchain, plunged, dropping to 156 exahashes per second from 232 on the 23rd. The practice, known as curtailment, is a way for miners to help stressed electricity grids. Some of the biggest miners in the U.S. halted certain operations because of the weather. That includes Riot Blockchain and Core Scientific, which filed for bankruptcy protection last week. The storm stretched from the Great Lakes near Canada to the Rio Grande along the Mexican border. Last, Bitcoin mining pool BTC.com was hacked earlier this month, losing millions of dollars in the cyber attack. That's according to an announcement yesterday from BIT Mining, saying that about $2.3 million in asset value owned by its subsidiary BTC.com were stolen in the hack, as well as about $700,000 in asset value owned by BTC.com's clients. The firm reported the cyber attack to Chinese authorities, who then launched an investigation. The company says that it has now implemented technology to better block and intercept hackers. It added that BTC.com is currently operating its business as usual, and other than its digital asset services, other client fund services were not impacted. Meantime, Defrost Finance, which is a DeFi protocol built on Avalanche, also experienced a hack and said yesterday that those stolen funds have been returned. In a tweet, the company said the impacted users will soon be able to claim their assets back. Citing blockchain security firm PeckShield, CoinDesk reported that the hack could have been what's called a rug pull, netting about $12 million. Defrost Finance didn't indicate how much was stolen.